Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, May 6th at about noon Eastern. Well, the April employment situation report this morning had the good news and the not so good news. The good news was that non-farm payrolls increased by a solid 428,000, and the unemployment rate held at 3.6%. The not so good news is the drop in labor force participation. Well, for goodness sakes, the not so good news is the drop in the labor force participation rate. Given the number of record job openings, that is a signpost that will continue to leave the market concerned about persistent wage-based inflation pressures as employers offer wage-based incentives to attract workers. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Now, when I captured this chart today, the SPY was trading at $409.72. That's about $40.97 on the S&P 500 itself. Now, as you all know, this is the ETF that closely follows our benchmark S&P 500 index. And of course, this is by market capitalization, the top 500 stocks in the U.S. stock market, again, by capitalization. So it certainly gives us a crystal ball, if you will, for the mood and the manner of the market right now. There's a couple of ways to look at this. Isn't this great? The move down is so far. Gosh, we'll probably turn around soon. That observation, or the holy cow, we're down, how much farther down are we going observation. And the honest to goodness truth is that no one on this planet knows where this market is going next. But being able to analyze and assess the charts that we're looking at certainly give us a help. Now, when I captured this chart again today, as I said, the SPY was trading at $409.72. That's about 14% below the SPY's last all-time closing high in January. At $477.71. That was right here on January 3rd. That was the last all-time closing high of the SPY. So we know that the SPY from that January high, we know it started, as I said last week, it took a dumpster dive and came down and made the first lows down here in January at about 427 down here. Then it consolidated for a few days. So now we're in a downtrend here. We were in an uptrend in the fourth quarter of 2021, making higher lows and higher highs. Then that pattern started to get dicey here in November, December of 21 and in January. And actually then it started looking more like a potential head and shoulders, which is a top reversal pattern if it plays out. And it did play out. And then, as we noted, the market made a dumpster dive here down to these lows at about 427, rallied back up almost to prior lows, which means what was support back here is now resistance, but it moved back up, saw the 50-day moving average overhead, certainly the red line, the 20-day moving average, said, man, this is tougher than I thought. Fell back down to the 200-day moving average. It's kind of cool how moving averages and price can really act as support and resistance. Rallied back up, said I'll take another punch at it. Again, couldn't get through the 50-day or that prior high or all of the resistance that was up here, and then fell dramatically down to where we all know the February 24th lows. All gapped, almost everything in the market gapped down on February 24th and then rallied pretty dramatically. Of course, a lot of people thought that was the low, and you know, maybe not. So it opened at 410.64 on February 24th, got the strength to move up, close on its highs, rally back up into this 440, 441 zone. That was prior resistance. I know this can get confusing. That was prior price resistance, was support, now resistance. Moved back down here to these lows, down around 415, rallied back up. And then at this point on this rally, most people said, all right, well, that was the bottom, that was it, everything's fine now. But it was not to be, and certainly as the war in Ukraine wore on, that had a lot to do with our supply side shifts. So the S&P rolled over, came back down, and back down literally to where it is today at $409.72. Now we're starting to push our luck here a little bit. I think I said last week that if we go below 415, it could take another leg down. Well, we're below 415. We do have this little test here at 405 from, this was Monday's low here, was 405, rallied back up. Everything's fine. No, it isn't. Came back down, and now we're back at these lows. So, you know, this we do have some support here from March a year ago, but if we start into a really negative Monday, I suspect we're going to see a lot more volatility in the coming week. And remember, the smartest thing to do is remember that missed opportunities are way less expensive than lost money. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100 NASDAQ 100 index, top holdings in the NASDAQ 100 are Apple, Amazon, Microsoft, Alphabet, Facebook, Netflix, all those guys, and of course Tesla. So today when I captured this chart, the QQQ was trading below its 200-day. Up here, the black line, the red line is a 20-day, the green line is a 50-day, trading below all of these moving averages, down at exactly $310 when I captured it a few minutes ago. Now we know that the NASDAQ made an all-time closing high back here, or the QQQ I should say, on November 19th at $403. And it kind of wandered sideways here, consolidating. And then, of course, that was the last all-time closing high. It too rolled over in January, came all the way down to these lows. And I meant to tell you, right now it is trading about 23% below this all-time closing high, which means at the moment we're in bear market territory. So we came down to these lows in January after rolling over and moving down here. We came down to the January lows at 338. It tried to move back up again, get over the 200-day moving average, which it did for, the 20 and the 200-day moving average. Did that for one day, could not hold, came down, retested these lows, and fell right through them. So now we're getting a lower low, which means, of course, that we're in a downtrend, which we knew anyway. Rallied back up, had this February 24th low that everybody had at $318.26. It opened at that point right there, gapped up and moved up to close higher, tried to get over the 20-day, fell back down, retested these lows again. It's been a lot of that, hasn't it? Retested the lows at March 14th at 317. So that's always a good sign. You say, well, buyers came in and held it up. That's a good thing. And the Qs rallied back up as everybody bought tech stocks, saying that was the low and we're good to go from now on. Then once again, through the 200-day moving average, closing above it for one day. But one day didn't cut it. It didn't the last time in January, and it didn't this time. So that 200-day can be a tough dude for resistance when it's moving along over price. Price fell back down again to where we are now. So we're back down here again at 310. We didn't, breaking these lows here at, breaking the lows down to the 309 lows right here. We broke them today and moved lower. Now, the QQQ, please know, this is where it was last March of 2021. It has been a heck of a ride, but look here, before you say that everybody's in agreement one way or the other, meaning, oh yeah, everybody's very bullish, that look left on the chart over here. This is where people are bullish and traders are bullish, and everybody's pretty much getting along fine. When you see the trading range of single days moving up and down dramatically, as you have ever since the market opened in January, most days, not all, but many of them, the price range is very wide. Bears push it lower, bulls push it higher. There's a big fight between the bulls and the bears here, and as of the moment in time, the bears have pushed the market down, the QQQ down to this 310. So you can see by the width of the candles and the very erratic pattern, see how nice and kind of clear this is, see how messy this is. That means that nobody's agreeing, or the majority of traders are not agreeing right now, except the bears right now have a little bit of the edge over the bulls. Will that always stay that way? Of course not. But we want to be wise here. It's been a heck of a ride this last year, and certainly since January. So you may want to, I've got most of my account in cash right now. I'm just kind of waiting. I've been trading in and out a little bit, but I certainly don't want to take some losses here again because missed opportunities are a whole lot cheaper. So mind these lows here at 309, 310. If the NASDAQ goes below that, we could see another leg down. Finally today, and with that thought in mind and carrying it into this chart, if we do want to look for potential bottom fishing, I'm looking right here at the daily chart of the iShares Self-Driving and High-Tech ETF, symbol IDRV. It has 128 holdings. Top components include Apple, Toyota, Intel, Tesla, and so forth. Now it made and the symbol is IDRV. It made a recent high in November of 21 back here at $57.43. Then it kind of finagled around in December, as did most. Assets moved up. In January tried to stay positive atop the 50-day moving average here, but it could not, certainly not in the face of everything that was happening. So the iDrive, we'll call it for the sake of simplicity here, fell down to this 47 zone. It tried to consolidate in here, moved back up over the 200, fell down, did it again, hit its head on the 200 here, could not stay above the 200-day moving average. And so it fell down and did a dumpster dive here, down to these lows in the first part of March, at about where it is now. This was about 42 right here, moved up, held, retested, and held. But you can see here now how many times in the last three charts have we seen both small and large, almost double bottom formations, retesting and so forth. And it can hold for a little while, but this is not a bull market right now, so you cannot say, oh, that was a double bottom, it played out perfectly, that was the bottom of the market, it's all over. We can't say that yet. At any rate, the iDrive moved back up from these lows at about 42, got itself over the 20-day, hit its head on the 50-day, closed above it 1, possibly 2 days, but then fell back down to dive lower again. So now the iDrive is consolidating here along these lines between 41 and 42. What I'm going to do, I'm going to keep an eye on this. Again, I kind of like the thought of having some of those stocks like Tesla and so forth. This is a much less expensive way of investing, but I do not, under any circumstances, want to lose hardly any money at all on this trade, especially in the conditions that the market's in. So when I captured this chart today, the iDrive was trading at $41.18 right here. If in the coming week the iDrive can stay above 40, and if the SPY and the QQQ are moving sideways at least, or horizontally, or moving higher, or are calmer, then and only then I will consider this. I will buy a small position, and my stop will be a hard stop placed with my broker at $39.50. A hard stop placed with my broker at $39.50. And that's only if the iDrive stays above 40 and the market looks a little more reasonable. If and when the iDrive can rise above the 50-day moving average, which is coming down overhead here, it can offer resistance. It's now trading at $43.93. If and when, and it could take a week, 2 or 3, the iDrive can move up and make 3 consecutive closes above the 50-day moving average, at that point, I might add to my position. And of course, by then, my stop will be a trailing stop. So you might want to keep an iDrive in the coming week. And now, please know that this is the perfect time to check out my online training programs. These programs include our flagship trader training, 7 Steps to Successful Trading. We also, very popular is how to swing trade successfully, how to trade the trend for profits, 3 winning setups, that's always a good one, bottom fishing down here, and we have many more. So please know these programs can help you increase your gains quickly and easily, and they are low priced. To see all of my online training programs, simply go to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.